So I'll start with an easy question. What is your forecast for the federal funds rate at the end of 2023?
Well, that's an easy question. So I'm a little bit more, a little higher than the median in the SEP because I see a little more inflation persistence than the SEP. And so I think that's the key point. You know, the committee's path in the SEP, I think, is very valid. We need to continue to bring up interest rates into a restrictive stance. We did a lot of work this year in getting expeditiously to a restrictive stance. Now we're just in starting that, bringing rates even higher. And I think we're going to need to be there for a long, quite a while in order to get inflation on a sustainable downward path. So my path is a little bit stronger than the median path next year. The median had it between 5 and 5.25, and I'm a little above that. But, the message from the SEP is we have to continue to raise rates because we have more work to do on inflation. Inflation, although we've had some welcome news, is still too high, and we need to do what we can with our monetary policy tools to bring it down.
Well, that raises the question of why you and your colleagues raised your forecast for where the inflation rate will be, the PCE inflation rate, at the end of 2023.
Well, we put in the forecast, the last SEP in September, and the accumulated evidence shows that inflation did run a little higher than we had expected it to run this year. So we're starting at a higher level. And so the work that we're doing with interest rates over the next year and the following year is really going to get inflation down. So if you look at the SEP, there is a material improvement in inflation next year, not back to 2% yet, but at least coming down. And then we'll have to adjust policy to ensure that inflation is sustainably down back to 2% after that. So that's what the job of the Fed is, to make sure that we get that inflation moving back down. And that's what our policy path in the SEP conveys, is that we're very committed to getting back to 2% inflation and price stability.